Good morning, everyone, and welcome to the European crossover webinar. And it hasn't been a lot of news this morning, just more stuff coming down the wires regarding Greece. So that's going to wait on the sentiment. And as 50 Pips likes to say, watch out for the Friday flows. It's a little bit unusual week because generally with Friday flows you get the market going in the direction of the overall trend of the week, and then you want to get the hell out of Dodge. But we've actually, we're kind of going back and forth until once we got past FOMC, and Yellen was somewhat dovish in the way she presented all the information, even though on the bigger picture, things seem to be, the data seems to be strengthening. But so that got us going on the upside. And since yesterday, we've started going to fade a little bit since about the middle of the New York session morning. And so that's where we stand right now, is we're over here pushing down here closer towards 113. Closer towards 113. There hasn't been a whole lot of news other than just basically headlines, but the headlines have been negative, to say the least. I've tried to retweet some of those out, but essentially the main thrust of the story is nothing got done, and everybody was looking for Thursday, and people kept thinking something was going to get done on Thursday, and nothing got done. And I did go and tweet out that just yesterday, $1 billion was withdrawn from Greek banks, which follows several billion over the course of the last few days. So, obviously, like I said, people are very concerned over there, and someone was thinking that maybe they can get a deal done and they'll announce it on Sunday. That's just simply not going to go and happen because, they met through Monday and Tuesday and backwards and forwards trying to get a deal on Thursday. Those guys aren't going to try and burn the midnight oil, as I said, on Friday and Saturday to make an announcement on Sunday. That's just not happening. And Germany already said that it's going to be, what's going to happen is if Greece comes back with proposals, that's what they're looking for. So it's saying here, German government spokesman says, this requires Greece to play its part and present proposals. So nothing's going to happen ahead of Monday, despite how much some people want to think, oh, everything's all good in the hood. That's not how it's going to play out. So at this point now, the market's looked at everything from a bullish standpoint for whatever reason. I don't know why, but they've gone and looked at it. I mean, obviously, like I said, when Yellen came out and was can't say it less than plain, she was playing out dovish. When you look at the data, I mean, we had a weak first quarter and very weak, surprisingly weak to me. I thought it was going to be weak, but I didn't think it was going to fall out of bed. So, but the data has been starting to turn around, but she's playing it as the cup half empty, the glass half empty. I don't know if necessarily she should go as far as the glass half full, but at least recognize the data for what it is. But they're playing it that way. It doesn't have anything to do with Greece. They're not going to be stopping on what's going with Greece. I will go in and say we did have fantastic jobless claims numbers. From a longer perspective, I do expect a BAFO NFP coming up, which I think keeps the euro from, those ideas about going up to 115 and all that. I just don't see it. And I was short yesterday, and when I hung on to my shorts, and I was down on my initial position, but I was making money by, scalping it. So I just don't see where the euro is going to have those legs to go up there. And then I alluded to that. Those German zoo numbers were horrible. That was really a huge drop. I just don't see where the euro is going to go on and get itself up to 115. It kind of reminds me that run up to 1468, and people were so bullish and then they were talking about 115. What they were actually getting past 115, going to 118 and 120. And frankly, I just don't see it. I don't necessarily see the euro collapsing, but I just don't see it making those moves up. Part of the reason for my concerns on that initial run up had to do with this, what I call the sustained run in the crude oil market, and it was going to go and impact. I said for the next 2 to 3 months, it's going to go and impact Eurozone growth, and we've seen just that with the numbers that came out of Germany. And I just don't. And Germany's a powerhouse, so if Germany's having problems, you can imagine what the others are going to be doing too. That's my thinking. Is when I look out, even though I day trade scalp, I always like to have a medium-term outlook of the overall view, and I just don't see it. That kind of gives me the conviction to sell bids and then try and hang on. And so that's my thinking there. I think that we should be making new lows going into the New York session. I think we're going to punch through those lows, and we'll get into that. But you know, everybody's going to try and say the right things. I just don't see where you know, we don't go lower and test and break to new lows coming into the New York session. I just don't see it. They're doing pretty well, hold them up here. We'd have to get above 1323 on a half-hour close in order for us to start heading back up, heading higher. But I just don't see it. I'm saying is when you look at the news, if you're a bull and you see these headlines coming down, the market's breaking down, the headlines are coming down, the wires are negative. The smartest thing you can do is either have gotten out or tighten up your stops. So if we go in and take out 113, we're going to go in and hit some pretty decent stops. There are some key fibs, and we'll take a look at that. But I don't think there's anything out there. We do have Canadian CPI that's going to be coming up at 8:30 Eastern time. But other than that, I don't really see anything of significant impact other than what's happening in the SPOOs. I mean, those things are a beast. I thought we were going to stop around, which I posted a chart, around 2101, and we've just gotten past that. Now, we're overdone, and we're in that key level area of 2114.75. But a couple of people have noted the volume that we've seen. Chris Cesaro noted the volume, and also so did Shy Girl. They also noted the volume, so you know, we could maybe we'll go in and blast them. One thing I've noticed about the S&P over the last few weeks is it has not paid any attention whatsoever, for the most part, to the Greece news whatsoever. So, like I said, it's something to keep an eye on. I mean, if we break higher, I don't think nobody's going to be able to stop it. You almost have to get the hell out of the way in this particular circumstance where it could really start to take off. And if they do get something good news on Greece, oh my God, we'll make all-time highs if we get some good news, because then it's going to be all risk on if we get that early next week, which I think they're going to come up with something. I have no idea what it will be, but I think they will. I just think they're just going to have to take some haircuts on this debt, even though they don't want to. So things have gotten so bad in Greece that I think that Greece won't get the debt reduction that they like, but the creditors are going to have to give some debt reduction. So probably something like that, a combination with a bit of kicking the can down the road. So if they can get some semblance of some decent debt reduction, not anything of any real significance, then Cyprus has something to go and take back to say, we did, I fought the good fight, and we got the debt reduction. Okay, so but nothing's, like I said, overall nothing's happened if you think about it over the last 24 hours, other than the Thursday deadline that everybody thought something was going to get done has come and gone. And essentially that's it. I mean, yesterday I was talking about, when those, reminds me right now with the squawk, the guy was saying on the squawk, I said, look, the market just doesn't care. And, but once we got past that deadline, because everybody was expecting the news to come out tomorrow, something's going to go in and get done. Definitively something's going to get done. And we passed that deadline. So now the market has to face the reality that we're past the deadline. and we're also going into the weekend. And if you're long, you have to wonder, how much is this going to feed on itself, in the sense that everybody's bearish? We've had a good run. What if bulls start to go in and pull in their their positions? Then we can start to get a little bit of a catalyst to the downside. So that's a concern here with Eurodollar, and we've seen it so many times in what we call, or forward 50 pips calls, the Friday flows. But like I said, we start out the week kind of like meandering for the most part, and then once Yellen put back on her dovish cape, that allowed the euro to go on and move higher. I still do expect the Fed to go on and raise rates, but I expect it right after the September meeting. So that gives just like an overall view. And some of these things, I expect the NFP in the next couple of weeks to come up really strong, which I think one of the reasons why I was willing to go and hang on to the shorts, even though at the time I was feeling some pain when we got above 114. I mean, I was scalping against it up there, trying to go in and manage my position. But I just don't see where they can go in and make any type of an extended move. I just think we're just bopping around this range, and we go up to another high, which we did at 1468. Then we went to the next one, which was I think it was like 1332 or whatever. Came back down. Now we're back up here and set new highs, or what would that past high now to 1436. And I just think it's just moving and bopping around. But I think that the upside is limited. I don't think that it's going to totally fall apart, but I just don't see where it has the room to make any real movement up here. So we'll have to see, but I just think that that's when you look about what the theme of the market is for the day going out, and that's the way that I trade, in the sense that not only I look at the news to give me a bit of flavor, but I also look at the news in its totality to kind of like, whether it's the economic reports, whether it's stuff coming down the wires regarding whatever's happening, I try and look at that to go and give me what the theme is going into the New York session, how the market wants to play it out. So, as we come into today, I think that we're going to make new lows. Is it because the bulls were definitely in control, but we lost that. But we have two things that are playing out. Actually, if you think about it, it's three. The technical picture is broken down somewhat, at least on a very short-term basis. We've got a true fundamental story that people can sink their teeth in, which is we've gone past the Thursday deadline, and nothing's going to happen until Monday. And then you've got Friday flows, which means, as the market starts feeding on itself, and, so much of, with the Forex, you have a real great amount of retail traders that trade Forex that are not going to go and hold positions over the weekend. So if those traders who have been long, they're thinking, well, I'm seeing my profits evaporated, or I'm going to keep hanging on, and then they're like, well, I'm not going to hold it over the weekend. So it's those kind of things that feed on the market. It doesn't have to be that there's any real, in a percentage-wise, the actuality. It's just that it hovers over like a cloud, dark cloud, knowing, wow, the lower we push, more retail traders are going to start bailing out. Everybody else knows that it's going to feed on itself. The technical picture continues to break down a little bit. It's keep getting a little bit worse. And on top of that, we actually have fundamental news that's being supported by the technical picture, and nothing appears it's going to be resolved in any way until we get to Monday. What kind of risk am I going to be holding over the weekend, and how much is this going to go and feed on itself? So once again, that's going to be the theme as we go into New York, and I do expect us to make new lows into the New York session. So let's go and move in here to the Eurodollar. We can go and take a look at it on a 2-hour, but I think it's more the 30 minutes that's given us a better indication of what's happening. But we'll go and look at the 2-hour first.
You said once we firmly anchored in the Eurozone, it's a similar rhetoric we've already been hearing throughout the morning and throughout the week. We will keep an eye on these comments.
So here we are on a 2-hour here in Eurodollar. We do have a trend line coming down here, and 1272 is going to be key on the downside. right here. Now we got, and I told you about this 1323. 1365 was pretty significant when we lost that. And you can see here that the market, I was looking for us to close below 1365 yesterday in the New York session. I thought, man, if we close, if we can lose 1365, that's really going to weigh on this market. They were defending it. If you can look over here, you know, we had the big breakdown. This was the news, and this is what I stressed yesterday was it, and I just happened to step away when we got that news, the idea of there was being an offer made, and the markets popped up. But in light of what appeared to be good news, even though it was a rumor and all that other stuff, my thought was, and as a day trader, you have to be a doubting Thomas, because I'm saying, well, not I'm, you know, like I said, it depends. I mean, obviously, you can take positions that are going with the market or whatever. But I'm just saying is when you're trying to take the other side, or you want to take advantage of the market going back and forth, you have to be kind of a doubting Thomas. I mean, if you're looking at the technicals, that's fine, and I do because I look at the levels. But you have to be a bit of a doubting Thomas, even if you're looking at overall bigger moves. To really make the most out of your trades. I don't want to say be successful, because there's different ways to be successful in the market, and going with the trend and just playing the technicals is certainly a way that a lot of people do, and they are successful. My thinking is, like I said, the way that I trade is that I'm the type of person I'm a big doubting Thomas, and why when Euro made its first run at 1468, I was saying I wasn't looking for a pullback, I was looking for a reversal. And so when I saw this up here and I came back to the desk, we were already trading back in the teens. We were already giving up back half of the gains. And I was already ticked off. I thought, man, I could have gone and, you know, sold it up there, had it been in front of the desk and saw the news and, you know, try to figure out, hey, what's going on? It's already starting to fade. So I made the point was that, hey, this is not good for the bulls. We should have at least ground up 50 pips. And I go, this is not good news whatsoever. And then right after I tweeted that, the market goes to hell in a handbasket. And it's saying that, you know, hey, this was just an offer. And then and Merkel comes out and disputes the story. And that just sent the market going lower. We came down here to 13, 38, 39 and popped back up. But the key thing, as I was mentioning, we were holding this 65. And I didn't think we'd break it here, but I thought we'd break it on this one. I thought, oh, man, that'll allow us to go and work lower. And then same thing here. We're still holding the market, got up into the 80s. I saw it in the Asian session. I thought, man, they really don't have any business getting above 14. We're going to go and see what's going to happen. And then finally as we came into Europe, we just started sliding. So 1272 is going to be key. But we're going to get into the 30-minute to see where the thrust of things are going to possibly happen. Joe says, at least the Portuguese finance minister is calm. Yeah, I really got upset about that. That, you know, all the other finance ministers are running around, and I'd even tweeted a picture of that, running around with chickens with their heads cut off. But the Portuguese minister, that guy's a crock of you know what. In the Eurozone, we look at things, we look at risk and contagions very calmly. There's some bunch of crap like that. It was just I can't stand when people just go and flat out lie like that. It just pisses me off. So that's why, like I said, it really upset me that they're coming up with this ridiculous statement when all the other finance ministers, who the hell is the Portuguese finance minister? You've got all these other big wigs from Germany and the other ones, and you got Dijsselbloem. They're all running around with the chickens with their head cut off, but they certainly have a lot of concern. And this and this low ball doesn't know his head from his rear end. Oh, we all look at things calmly. What a bunch of crap. It just really disgusted me. But anyway, so let's get in here into the 30-minute in the euro dollar. So this is what I think what's going to go and happen is I do think we're going to punch lower. And I did share this on the Inside Call. Here are the levels that I'm looking at right here. And let me get, you know, I didn't punch in this one. So let me put this here so we can all know what's up. Okay, so here we are right here. This 1285 is going to be key. Here's the thing is we're punching here, but generally we're in a quiet period generally uh, at this time of the day. Generally, we're not going to make new low. We do, but but generally this is a quiet period between 6 a.m. to 7 a.m. Eastern time, right before New York comes on. We can make new lows. I don't know how much it would squeeze. Actually, I was looking to go in and cover shorts into this 1285-ish area, right in here. But because the market's held up here, I don't know how much it's going to be. I don't think this is going to be of any significance, but let's take a look at this here. I don't think it's going to be. Hold on. But we'll, as an extra number here. We're just about ready to make new lows, too. Yeah, 1286 would be the 161% of what we just put right in here. So, I think we'll blow past here. 1279 is pretty key right in here. I like this. I like the idea that we would come to 1285 and overshoot it. I think the keys are going to be 1285 to 1267 right in here. So we can, I guess, recolor that too. I think this here. Right in here. Because we might be able to pop them up here. But I think because we've already we'll probably get a pop back up here like the 1302 or something like that. But I think that we're going to have to do some homework down in here into 1285 to really scare them. Like I'd say you could start to cover like around 1283, and we could dip as low as 1267. It's just that right now we're in a quiet period. I don't know if there's going to be a whole lot of follow through here. So I like this 1267 on a pretty good overshoot, a real scare, and then a pop. Now, that being said, the key number is going to be the 1237 down here. Yeah, because like 50 Pips was saying earlier, goes, be careful with don't fight the flows. And I could see us popping back up here because, like I said, it's a quiet period. It's even before New York comes. And generally, you know, you have to wait. They're going to make their move in Europe, and then they'll wait for New York, and then New York gets to make its move. And it's just a little bit early for the bomb to fall out, provided that there's some news doesn't just immediately hit the wires. You see what I'm saying? So like I said, 1293 is 160 is a 61%. So maybe we can find a little bit. My only thing is that even if you get a bit of a bounce from here, it's a bounce that they're going to fade. You might get a bounce at 3 or 4, and they probably want to go in and fade them. So I would prefer a move down to 1285. Let me go and get this here. Generally, I don't put one color right on top of the other color, but we're going to do this for right now, just to accentuate what we're looking at. So I think what I'm looking for is I'd like to see him move down to 1285, and they'll overshoot it. So if you're trying to squeeze a little extra out of a little extra juice out of this, I like them at 1283, 1282. But if you're trying to buy them, you can probably get a better value as we make a move down to 1267. As you can see here, this is a slower ridge. Because if it was a a regular day, I mean not being a Friday, you can see it kind of popping back up here just a little bit. But once again, you have to be a bit cautious. Um, they could, and they may try and get up. They're trying to get up to one. They're just about to even. We did come to that 1293. I don't know what the actual low was. Might have been 91 or 92. Um, I just, like I said, any pop back up here, it's going to be faded. I mean, they can maybe make it back up to 3 or probably 5, but the market's going to, like I said, we got that pop. Remember I was telling you going into New York, before New York, they're probably not going to go on and sell them off that hard. So anybody that played the short side, anybody that played the short side and were looking for a break of the lows, they've been able to go and cover 1293, but I still don't like that low. It's just not quite low enough if you consider how much trading was done right in here. So I was telling you I was expecting new lows, and New York hasn't had a chance to jump in yet, but it's just, I would have preferred to see something like 87 and then try and bring them back up a little bit. I have a little bit more confidence. Here I just feel like anybody that's here, they're going to try and fade them right here a little bit. And if we got down here, then I'd say, oh yeah, okay, great. It's New York hasn't opened. Let's go on and buy them back here, and then let them rally them up to about 1305. Then you can look for another fade, and that'll take a sub 85. And I can see why they don't push it harder, because New York hasn't had a chance to jump in. But it's still, I just don't like it here. I would have liked to have bottom or covered shorts if they would have dipped in, let's say, into the upper 80s, or let's say around 87. I say, you know what, that's probably all you can get ahead of New York. Why don't I cover real fast? If they get back up to even, like 02, 01, I'll sell them again, because I'll have, gotten a better position by another 12 pips or something like that. And then I can look for a move later into New York session, going into the low 1280s, take out 1280, get into the 70s or whatever. But that's what I'm saying. You see how it's pulling back here. And I mean, really what you're seeing is exactly how I scalp a market. So I was already looking for this move lower in here. I just, like I said, right in here, I would not be buying it back. They may pop back up. I would have rather seen it pull a little bit lower, but I didn't expect much beyond that, because New York's not open yet. So they're kind of like I said, if there's no follow through on the downside, if they don't fade them hard, then they'll try and work them a little bit higher on a little bit of short covering. But you think about it. If you bought them at 93, I think it was 93 was the low. Let's take a look at this. So if you bought them on the bottom tick, you've basically got a total of 6 ticks. That's just not good. You see what I'm saying? So once again, bringing back here, I still expect lower prices. I do expect this to go into the 80s and test this 85 into the New York session, unless some news event were to come up that makes it look like it's real, all good in the hood. Here's the thing, though, you have to recognize is that we're still, this is still a bull move. I mean, the bulls have control of this market. Got to give them the props. You know what I mean? So yeah, we're overdone. We need to pull back. But bulls are in control of this market. So you have to know that it's not even a matter of like, I'm bullish, I'm buying it. It's a matter of, even if you're short the market, you have to be reasonable in what you can expect. So even though I think it's overdone, I can expect this to go into the 12s, the low 12s, at least for now, you'd have to realize that on the pullbacks down here, they're going to be supported. Even if it's just plain old short covering, they're going to be supported. So that's where we stand here, and we're here at 02. I still think, like I said, they'll lean on them in New York. I really would have liked for them to have dipped into the 80s. I feel way more comfortable had they dipped into the 80s, 87, because they could have really cleaned out some people. And you'd have a lot of people coming in here at this 85. And it sounds like you're just parsing over a couple of ticks. No, it's a matter of the technical picture because 85 is pretty clear right here, or pretty key. You see right in here? Move back in here. See how key 85 is right here? On the 30, on the 2 hour, it's 1272. But my thinking is you would have had a ton of people, not a ton, but you had quite a few people covering their shorts here and saying, hey, look, I better take some of my stuff off right now. And we just haven't seen that yet. If we would have had that dip there, I would have thought, okay, well, we'll probably see some good short covering, which is going to allow us to make a run up to like 1305, 1307 maybe, and then we can try and maybe see if we can take them lower in the New York session. But so we'll see how they hold them up over here. I just don't. It just doesn't feel good right in here. The same way it was trading around. It was trading between. You could see it real quick. It was trading between 1312 and 1317. Well, actually, it got up to 1317, and it quickly dropped down to 1312. And then I said, that doesn't look good. It looks like they're setting themselves up for a fall. And you'll notice that. But one of the things I like about trading Eurodollar is because of the liquidity and the price action is very good. So once you get used to really just staring at quotes, I'm talking about when you put your mug in front of the screen, you can see the price action. You can sense, not all the time, but you can sense moves and say, boy, this doesn't look good. It looks like we're going to break. And that's what I saw when we got down to, we were trading like at 1312 and or 1314 or something. I think we went 1317. We were 1317. Yeah, that was it. We were trading at like 1317 or 16, and we came up to 1319, and we quickly slammed him down to 1312. And I go, this does not look good. Doesn't look good at all. For it to do that, I know, and I thought to myself, I know it's quiet, but you shouldn't pull that far back down that quickly. I mean, it was almost like the next two trades, and boom, we were at 1312, and it wasn't like there was news or an economic report. So that was my thoughts right there. I thought, this doesn't look good. So we're going to see what they're doing here. I think they're going to kind of hold them here in the New York session. Maybe they can take them back up here into the teens. But I would be looking for lower lows. We're already at break time, so let me go on and take a break. Hang on. Okay, everyone, welcome back to the European crossover webinar. And seeing the euro has come back a decent amount here, back to 1312. Just need to get rid of this. Okay, and let's go on and take a look at a few other markets. We're going to also take a look at here, dollar CAD. Let's go on and switch screens. And we came down here, we talked about this yesterday. This 2167 was a 61%, and 2152 was 100, or 2159 was 161% and also in the 30-minute we had 2152 as a level. So that's pretty key. We did continue to extend lower, but then we were able to go in and put in a nice bottom here, right at this 2134, 30-ish area, and then from there we've moved on. Above us is going to be this 2264. That's going to be fairly key level here. If we can go in and make a run for that, we'll have to go in and see. Let me take a look. And Corollo's on the wires again, basically saying he didn't mean to go on and make any references to rates and levels on FX. We've come back a little bit in dollar yen, but it didn't have any real meaningful or measurable impact whatsoever. So let's go on and get in here into the crude. So here we are on the crude oil market, and push it here. And we've talked about this for the last couple of days. Remember, I told you we need a 2 hour close above 61.22 in order for the market to go on and get bullish, to turn it on full bullish. And we just haven't gotten that. And we keep coming back into this red zone and failing. You can see how many times we've come into this red zone, got above it, and failed. Come into the red zone. We did spend some good time on it. Looked like we could move higher. We fail. We move into the red zone. We fail horribly. We rally back into the red zone, and now we're pulling back down again. Once again, I'm just not bullish on crude oil. Now, I'll tell you, I will say this. Technically, it's starting to act a lot better now. We're not seeing this wild, crazy junk that we were seeing here when the market was just whipping all about. Now, obviously, that had a lot to do with OPEC in the sense that, I guess because it was so thin that week that the traders were really knocking it about, and you can see here too. Now we're starting to get to a point now you got it's not really a long-legged doji, but we've got, let's call it a medium-legged doji. And what's the most recent trend, which was up? So the market runs out of gas. We test the downside. We set a little hammer right in here. The market works hard, but it's running out of gas. We're just getting multiple dojis, and the market gets quiet, and then we start to fade. And as we drop out of this red zone, then it accelerates. Still, once again, not really a whole lot happening here on this market per se on a bigger sense. I mean, only unless you're day trading. If you're not day trading, I said it before, unless you're day trading, don't tell me you're making money, because I know you're not making money unless you're day trading, okay? So here's that same trend line here that we've been talking about. It actually comes up now to about 60. But once again, my whole thing was we had to see, and I still think, even though this trend line, that obviously we get below it, much below, it'll accelerate the downside negative sentiment. But once again, I'll stick to my guns. We're going to need a 2-hour close below $59 in order for us to go on and initiate this downside move. I think that's just the only two ways about it. One thing is, if we were to get that close below $59, we'll clearly have broken the trend line, this uptrend line, and then that close below $59, I think that allows us to accelerate and head on our way down here. And it's just a matter of hitting the levels in the zone. I still think the market's just, I don't know what the heck it's doing up here, and the longer it stays up there, the more fractals are able to go on and come back online and start producing. So and Saudi Arabia already said it's going to be producing it anyway, so I just don't even see where they're coming through on this, but it is what it is here. Let's take a look. And we'll come here and take a look here at the SPOOs. And we're here at this 1475. Just one. And we're back up to this key level, 2114.75. And I had posted this chart here, 2101.75, and I thought that would, maybe the market would overshoot it a little bit, but I'm surprised that we're here at these levels. The only thing that I will go on and give credence to is that, which has been pointed out, is that there's been good volume on the way up from here. So, and once again, the market's still been in a strong uptrend. Hard to fight it, and the fundamentals, why I kept saying that we would never see.
Yeah, that's right. The Norwegian central bank chief just saying the growth outlook remains uncertain.
There's no reason to think, as I said, that we would never, when people were saying, well, we haven't seen a strong correction, we're going to 1800, we're going to 1700, it just wasn't happening because the fundamentals are too strong. And I've been pointing that out for some time here in the U.S. Not that they're strong, but they're strong enough to support this market. What I kept referencing to as the 401k put. So it's going to hold the market up. But I'm even surprised. I thought that we would at least start to work lower as we come into a bit of a summer swoon. But then again, with Janet Yellen's dovish tilt on her testimony, or not testimony, but what you said at the FOMC presser, then that just really just gave put gas to the fire on the SPOOs. So that's where we stand here on the SPOOs. Like I said, at this point, there's a chance that we can accelerate. I have no clue here. We'll see how it plays out. I mean, the Greece news really hasn't impacted it, so I guess if you could think, well, the concerns of Greece may keep it from taking off, and maybe that could be. But if they do get a resolution on Greece, that's certainly going to go on and add some fire to the upside. There's no doubt about that. But that's probably not going to come, like I said, till late Monday, maybe into Tuesday or whatever. So that's what we have here in crude. Let's go and take a look here at our old friend in gold. I did tweet this out yesterday that we reached 1205 was a 61%. I actually tweeted that out right before we got there. So we nicked the 1205 and took it out by 70 cents. And we've gone and faded back a good, looks like about a good $7 altogether. But once again, like I said, kept you from, if you were looking at that and you were long, gave you a good idea to step in a pretty decent area to step in and take the profits. Once again, if the Greece news goes kablooey, then obviously there's a chance that gold could go in and take off. But we'll have to see how that in itself goes and plays itself out on that. Let's take a look here at the 10-year note. We did come up here to the 61%, the 2615, and then we've faded since then. This area before has been pretty key, this 2624, 2627. I thought if we could pop up there, that was going to be a lot of supply up in there. But this 61% held the market up quite nicely and had a very, very nice fade from there of close to almost a full point from there, that 61%. But we've been on a buy, you can see, for quite some time. Even though we had this pretty good sized dip here to 2505, but that was key support here. They've been missed it by about half of a tick, and then market was still in a buy mode. So you want to go and buy it on the pullback, and we ran up here, but we ran into the 61%, so it was a nice fade in here. Other than that, like I said, the only way I generally trade these interest rates is if I'm looking at when it confluences with a level and a fib at the same time, or it sells real hard into a key major level. But the only time I'm going to take any action here, so I'm not calling for anything in particular here on the 10-year note. Obviously, the Greece story is going to have some impact, certainly. And let's go back in here. And here's the crude oil on the 30-minute. And like I said, it's been behaving pretty well over the last day or so. I mean, technically, where you're starting to see where a market runs out of gas. You're not seeing all this craziness that we were seeing here the prior 2 weeks. We're now starting to see where market sells off. We come into good support. We rally back in towards this zone here. We trying to think of the right word, but anyway, we go on and play around with this level, flirt with this level, and then we start to go and fade it. So now it's starting to trade like a regular market. If you want to call it a regular market, not this craziness that we were seeing here where the market was just whipping back and forth like a psychotic market, which is essentially what it was. But that's here what we have in crude. We can go on and move here into the currencies on the 30-minute. Okay, so we made it back up to this level. You can see right here, almost 13.15 on the euro. We've pulled back a little bit. I still do expect us to make new lows into the New York session. I'm run down here into the 1280s is what I'm looking at. Actually, now we're two. So this is I think we're going to go on and work lower. I was surprised to see him make it all the way up to like 13, 14. I did think I saw a 15 bid, but So we're here. Maybe they're going to try and make another hold again, but I think that we're going to go and test into the 80s. And down in here, we've got some nice here. And we came down here and nicked it right here, right there at the 61%. So we'll have 1285, which is key. 1279 is 161% of this recent range from 1339, yesterday's low, to yesterday's high of 1436. This will all just provide a good area of support, basically like a pillow. So I think you have to be, you know, the only thing is with Friday flows, they're going to continue to go in and pressure them, I believe, because the news isn't good and the technical picture's broken down, and you got a lot of retail traders that were bullish that'll be exiting out of their positions. That's just going to continue to add on the pressure, and then people will know there's that pressure, so they're not going to be willing to go in and buy. I wouldn't think. I'm saying so until we come down here, then you'll probably see some decent short covering, but I think we'll have to go and test right here at 80, maybe even supersede 80, exceed it, and dip in a little bit lower into the 70s before we see a nice bounce. Probably we'll see some nice, good two-way action as we go into the New York, or get into the New York session. But once again, I think you have to be very careful here. So these, I mean, obviously we've got some new people that came in, getting ready to come into the Morning Edge webinar. So here, you know, just to recap for them is what I'm looking at is this 1285. You know, we're into this zone 1285 to 1366. I'll show you the significance of 1285. You can see all the touches here. You know, ceiling, fall apart. Come back up, get above, it's support. We come back, fall back, we test it, we fall apart. Come back here, we fade, we get above it, then it becomes support. We get below it. Once we get through it, it falls apart. Same thing here, you rally up, the resistance, get above it, then it's support again on the downside, then it's resistance here. So you can see the significance of 1285. So on the 2-hour chart, it's actually 1272, which once again leads me to think that we can get a nice overshoot here. We'll get into the 1280s, probably jump into the 70s because the market has now turned quite bearish. We've gotten you can see here on the exponential moving average, we've got a sell signal right in here. You see how we've broken here? And we're just flirting here, and then it just kept accelerating to the downside. And we're coming into a Friday. The key drivers are, like I said, the technical picture is broken down. Got that. We actually had the fundamental story in the sense that, you know, everybody was hoping for a resolution. We got past the deadline, which is Thursday, and nothing's happened. And then even the Eurozone minister said that Greece didn't present anything. So those guys are going to come back on Friday, and nothing's going to go, I mean, on Monday. Nothing's going to happen over the weekend. Those guys work their asses off throughout the week, whether you want to say they're working or not. They're not going to go in and spend Friday night and Saturday night worrying about Greece. They're just not going to happen. I mean, at least in the sense that they're going to be making a meeting. Because someone's saying they'll make an announcement over Sunday. No way, I don't see it happen. They're just going to come in on Monday, and they're already prefacing that. The German minister even said, hey, look, Greece, we can still make an agreement, but Greece needs to present proposals. So they're just saying, hey, we need some stuff from Greece. So that they're not going to do anything over the weekend. They're going to have their meeting, and they're even having a meeting before the meeting to get ready for the meeting. And you have a meeting at, I think they said 3 o'clock to have a meeting, where the meeting begins at 6 o'clock, and they're not going to do anything. So that turns it, and then you have the Friday flows where you have the retail traders that don't want to hold positions or can't hold positions over the weekend. And so those three things end up causing the market, not causing, but feeds into that negative sentiment. So, I mean, the only good thing that we have to say is, for the bulls is, hey,
the Russian central bank euro